And now let's get into the details. A new study has revealed some commercial banks in Ghana could face liquidity issues with the new cash reserve requirements placed on them by the Bank of Ghana. The research comes after the central bank decided to raise the amount of cash reserve it expects from banks. According to the study, the situation could limit credit to private sector and ultimately result in the collapse, merger and acquisition of commercial banks as a measure to safeguard depositors' funds. We've been joined by the two researchers who came out with these findings. Dr. Richmond Atuahene is banking consultant and co-authored this with Joy News lead data and research analyst Isaac Kofi Ejay. Kofi, let me start with you though. What data formed the basis of this research? Hello, Kofi, if you can hear me. Go ahead.
Yeah, I can hear you. Also, 30 banks, we are looking at key data that inform this research. So we've been looking at banks. One is their non-performing loans of bank, which we've been studying the data for a while. And we've seen how it is increased from somewhere around 15% to now 24.6%. Essentially, if you have banks that non-performing loans exceed 20%, we definitely would term it as an industry that is actually in crisis. The next data that we looked at is the the DDP that took place about less than 2 years ago, where banks sacrificed more than $50 billion of their investment, depositors' monies that they use to buy government instruments, which were restructured and sort of rendered some of the banks illiquid as a result of that activity that the Bank of Ghana carried out. Now, if you look at the debt exchange that happened, it did two things. First, it sort of rendered the banks illiquid, and two, it created a problem for the banks where they found it very, very difficult to now lend to the private sector. And we've seen the activities of the central bank in the short term.
It appears Kofi Ejay has some challenges, but let me come to Atuahene now. Yes, I think there were some hitches in your communication, but you can conclude before I go to Atuahene.
So I was talking about the activities of the central bank in the T-bill market, where because government can no longer borrow from bonds market and can't also borrow from the international capital market, they are now looking at borrowing almost about more than 90% of government's, the monies they will use to finance this 2024 budget deficit. Everything is being borrowed from the T-bill market, and that is actually pricing down the private sector. And how is government doing this? Government is doing this using very lucrative and attractive coupon rates or interest rates. Previously was more than 30%. It's now that has been reduced somewhere between 24 and 27%. And so we've seen the activities of the central bank in the capital market, especially in the T-bill market. The fact that non-performing loans have risen above 24%. And then also the effects of the DDP. That was what actually informed us or led us to look closer to the liquidity positions of the banks, and we came out with this research findings, of which I know Dr. Atuahene will speak more about.
Right. Thank you, Isaac. Now, Dr. Atuahene, what exactly is this cash reserve ratio that commercial banks have to meet?
Thank you very much, and good morning to your cherished viewers and listeners. The cash ratios are just, the banks are expected to keep a certain percentage of your money with the central bank. It can either be in the form of cash, it can be form of treasury bills. So every 100 cedis you collect, before the changes, the banks were expected to keep 15% locked up. It is locked up. You don't have access to lend. And the unfortunate thing is that this money, it doesn't bear any interest for the banks. Whereas the banks have gone to borrow source money from customers where they will possibly pay in 10%. And that bit of it, the 15% of the 100 cedis will be locked without interest. But meanwhile, the bank would have to pay interest. That is, and Bank of Ghana do this to stem up inflation. It is all used in globally. You keep the reserves to monitor inflation and also look at your currency depreciation. And this is not the first time Ghana has used this policy. We've used it since 1957 and 1960s and the 1980s. But it became prevalent in 1980s when the financial sector reform was introduced, where the country was introduced to what we call indirect monetary policy, where you have the cash reserve, you have the open market operations, you have the bill discounting, and then you have what we call the repurchasing agreement, where banks can go and get finance. So it is not a new thing that we have. But what we have now, it looks a bit curious. Like Kofi said, after going through a stringent DDP, where the bank's bonds, 50 billion, 50.6 billion to be exact, has been restructured with payments, possibly final payment due somewhere in 2031. And these monies, any bank, and I want to state it here clear, the deposit which were used for the banks buying the bonds were customers' deposit. It wasn't the banks per se. No bank will have, one bank had 10 billion to buy bonds. No, it was customer deposit for which they structured in a way to buy the bonds. So when the bonds were restructured, it had a serious implication on the deposit, banks making deposit. Because if people walk in today and they want their deposit, bank would have to find money somewhere to pay the bonds that have been restructured. So all these things have had a serious implications on the economy. But looking at what has just happened, I think whether it was oversight, when they were calculating the 224 billion deposit, they didn't take in consideration the 50 billion which has already been restructured, which is a deposit. So ideally, the governor or the whoever that did it should have taken the 50 billion from the 224, because Kofi said we pick all these data from Bank of Ghana. Every data that we have is from Bank of Ghana. We didn't quote any data. And when we look at the Bank of Ghana policy rate, the policy issue, they said that the banks are not lending money, and they seem to be doing what we call lazy bank approach. And when we say in finance, a lazy bank approach, what it literally means that you don't want to lend money to the private sector, but you will want to lend money to government, because government has created an enabling environment. Like Kofi said, a lucrative business, 30%. And one time, right, it went to 33%. Now it's declining, but it's still the most attractive for the bank. So the governor said that because you are not lending, let me add this thing to you. Forgotten what has happened to the banks earlier. And again, like Kofi said, the non-performing in 2022, December, was 15%. As I speak to you, according to governor's own statement, it has hit 24.6%. And from the literature, if you read any literature, especially from Levine and Valencia, 2018, a paper done by IMF staff, any country, especially developing country, that has non-performing more than 10, 20%, your banking sector is in serious trouble. So when we hear these statements, you begin to wonder, why did we find ourselves doing this without taking into consideration the non-performing, high non-performing, and at the same time, the bonds that were restructured in addition to the higher cash reserves. So that one influenced our thinking, saying that maybe somebody we have to draw attention to the policymakers for them to realize that something has gone wrong, and maybe they will sit down and restructure it, taking into consideration of the bond that were restructured.
Right.
And to end my case, you see, the banks are not just in a charity, they are not in charitable organizations. No bank, they take deposit at cost. So if you tell me that I've taken a deposit an average of 20, 10, 15% or 10%, and I should come and keep 25% free while I pay interest, you're not being fair to the bankers. And I'm wondering why the Bankers Association or the bankers institutions in Ghana haven't spoken about this. And to end up my conversation, the the non-performing, what factors has influenced Ghana performing asset to have risen from 15% to 24%? I'm going to give you a quick answer. The microeconomic environment, number one, higher inflation, the persistent depreciation of the currency, the introduction of the myriad nuisance taxes, and also the unconducive business operation for banks. And I can tell you, if we don't take care, by the time we finish this program, we wouldn't have any private sector, because I don't see any private sector taking an overdraft or a loan at 30% in this microeconomic environment, because you're already saddled with high energy costs. What have you? Depreciation, high labor cost, everything. So we must be very careful. That is why we are putting up this paper, that we must revisit it and see if there is a way we can come together. And now the solution, quick solution. You know, we're talking about the Bank of Ghana using the monetary policy to control the issues. Nobody is talking about the fiscal policies. If you read the IMF document, the budget deficit, the financing, which is about 60-something billion, they're all coming from treasury bills. Are we not killing ourselves by making a conscious effort to reduce our expenditure? You know, in managing economy, we have the monetary policy which Bank of Ghana is doing. And then we have the fiscal policy which the finance ministry and the government should stick up to, which that place has been left unattended. And because of that, the burden is currently being shifted more to the banks, having suffered the DDEP. So that is what I'll say for the time being.
Right. Dr. Tiani, your submission has actually been very detailed, but I just wanted to shed more light on how these non-performing loans affect or impact the lending decision of banks.
Thank you very much. Thank you very much. It's a very good thing, because a lot of people don't appreciate that. The more you have learned, if you have 24%, if you take 100 cedis from somebody and 25% go bad, it means you are constrained. You are constrained by that element. So you cannot lend further. And you wouldn't, any prudent banker like me, who has been a banker, a professional banker, I will not lend when my non-performing is high. I would prefer to take the softer spot by buying treasury bill, where you don't make any provision. Don't forget, immediately you lend 100 cedis. According to Bank of Ghana, we have provision, current, OLEM, doubtful, and losses. Each of them has its specific tag. Immediately you lend money, 1% will have to go as non-performing, because the possibility that you may not get the money is high. If there's about 90 days, you move to OLEM. That is another 10%, and then we'll go up to 100%. So the banks also sit down and realize that if we are going to collect people deposit and lend, and we cannot get the money back when they come to us, why don't we take the easy spot when you have treasury bills? That is why government has found it very easy to create enabling environment for the banks to do the lazy bank approach. So it is not the banks, because currently, if you ask the banks how much are they going to credit, everybody is watching cautiously, because the microeconomic environment, the business environment is not conducive to lending. And because of the default they have, they cannot also recover it. Because if you go and the man tells you that, you give me money and my business cannot get the cash flows to pay you, or that you want to sell, if you sell the property or sell his business, you're not going to get anything. That is why we're going to experience this. And literature confirm what I'm saying. If you read any literature about non-performing, with its correlation with the banks cutting their lending, it is clear. The more you experience non-performing, the more you want to cut. The more you experience non-performing, the more you want to cut your lending to the private sector.
Right. Thank you so much, Dr. Tiahini, who is a banking consultant, for giving us that in-depth analysis and breakdown of what the literature means. But moving on, members of the National Association of Institutional Suppliers are this morning picketing at the Ministry of Education, demanding the over 100 million cedis owed them for supplies of school uniforms, PE kits, and school clothes for the 2021 and 2022 academic year. Let's get updates from Prince Kwame Kudoga, who is on the field. Prince, if you can hear me, what can you report from the grounds of the picketing?
Afternoon to you.
So, Sweetie, they are done with a closed-door meeting with the officials of the ministry, and the leadership of the group is addressing the members. Let's take a listen to what they are saying.
We had a meeting with the authorities at the Ministry of Education just a few minutes ago, and per that we have come to a conclusion. They have actually assured us that our concerns, they've heard it, we've submitted our petition to them, and that from today, as a matter of urgency, they are starting paying the arrears from 2021-2022 academic year. Then part of 2022-2023 academic year will be paid by Wednesday. All payments will be done by Wednesday. That is 2021-2022 academic year. Then part of 2022-2023 academic year by Wednesday they will pay. And aside that, yes, just this very Wednesday. Then aside that, we are to meet with the head of finance coming Monday to actually look at the outstanding balance or outstanding arrears that they need to pay us. And based on that, I think we can have a headway and we can make a decision. So by that, we have some other issues that we also raised. They have taken note of it, and they have they've promised that it will be taken to the appropriate quarters. They will look at it. So we believe that very soon we will hear positive news from them. But to say Monday will be here to actually know the balance that will be left and how they are going to pay us. So for today, we are saying that we are most grateful to the media and all members present, and that after Monday, when we meet them, and the decision is not so much favorable unto us, we will meet again as an association to decide what to do next. So until that, so by that, we are saying that we are most grateful, and we want.
By that, are you calling off your picketing actions?
So today we are suspending our picketing. So the word is suspending picketing for today, and Monday, after we discuss with the Director of Finance, we will go back to our members. Then we will make a decision. So whatever that will come out from our decision, we will call back to the media. And at this time, we want to take the opportunity to thank all media present. You've been very, very supportive, and without you, we wouldn't have come this far. And we want to take the opportunity to thank our members too for rallying behind us. Thank you. Mbamchonia, yekanina say few minutes ago,
So, Sweetie, that is it. After a closed-door meeting with the leadership of the ministry, they have called off their picketing. They suspended their picketing for now, and they are waiting for actions to be taken. If promises are not fulfilled, they will call back their membership for whatever action they want to take. So that is it, Sweetie, from the Ministry of Education here. My name is Prince Kwame Kutoga.
Well, thank you so much, Prince, coming to us live from the picketing grounds. The National Institutional Suppliers are suspending their picketing after a closed-door meeting with the Ministry of Education. In other stories, the Ghana Great Company Limited is under scrutiny by Parliament's Committee on Mines and Energy. This exercise is conducted periodically to assess, review the performances and plans of sector players in the power value chain to ensure stable power supply in the country. Samuel Mbura is at this closed-door sitting and joins us with details. Mbura, we know the Mines and Energy Committee summoned all stakeholders in the power sector this weekend over the power outages. Can you shed more light on what's going on there?
It was resolved and confirmed that the challenge at hand is a generational deficit in power. So after identifying the problem, the committee directed that the Electricity Company of Ghana should, as a matter of immediacy, provide a timetable to help Ghanaians and businesses plan. So from today, we are supposed to get a timetable from the Electricity Company of Ghana informing Ghanaians about the load shedding activities. After that, the committee chaired by Samuel Atachia also made mention about the fact that because they have identified that there is a generational deficit, meaning there are some outstanding debts that have to be cleared. So they will quickly move on to speak with the independent power producers, also engage the finance ministry to clear the outstanding debt. So all what the committee sought to unravel was to find out the challenge of it, the actuality on the ground, and they have been able to establish that it is a generational problem, and ECD is supposed to provide a load shedding timetable for Ghanaians to...
Specific agenda for today's meeting. Can you clarify?
Well, so this meeting is, it's an invitation to all the sectors to appear before the committee, the generators, the distributors, and the suppliers. So over the weekend, we had the PURC, that's the Public Utility Regulations Commission, as a regulator appearing before the committee. We also have the Energy Commission also appearing before the committee. So they had to scrutinize them, review their plans, and also review their performances and everything that borders on their operation. So 2 of them have already appeared before the committee, and at the moment, the Gridco is currently before the committee to answer questions on their activities, because Gridco, we know, is the distributor from the generator, which is the VRA, to the ECG. So that's more or less an intermediary between the generators and then the suppliers of power. So we don't know what time Gridco will be done, but they have been here for the past over an hour answering questions, and then their work being subjected to scrutiny. So after Gridco, we are expecting that the Volta River Authority, VRA, which is a generator, will also appear before the committee to give accounts of their activities and also, share with the committee their plans. So this is actually a periodic thing that they do, and it has actually coincided with the odd situation that we have at hand, which is the power outages in the country. So Gridco is before the committee chaired by Samuel Athachia, giving accounts of their activities and sharing their plans with them.
So, and then hopefully VRA. Any other players there that will be meeting the committee today that we should note? Gridco is currently in the meeting. After that, VRA will also meet the committee. Any other sector players present waiting to meet the committee? I think we lost Imbura. But let's move on to other stories. Members of the... Now, Chief Justice, Her Ladyship Gertrude Tokono, is this morning sharing her vision for the judicial sector with Ghanaians as she launches the Leading Justice initiative. We'll bring you more details after the break.